notes. Let's make sure that we participate and engage. And as always, I want to start our day off by taking massive action. That action stands for accepting all possible losses before entering a trade, preparing you for any outcome, sending yourself, body, mind, and spirit.
During a balanced approach to trading, trusting education, strategy, trade skills, and intuition. Imagine your trade successfully materializing, obeying your trading strategy, avoiding decisions based on greed or fear, and never looking back or stopping once your trade has commenced. All right. So if everybody can hear me okay, drop me one in the chat and we will get things rocking. All right. So, apologize for the last couple of days. Um, my internet line got cut over the holiday weekend, and so it's out of connection for a little bit. They got me back up and running, um, so we're good to go. So let's slide over to trading economics. Take a look at things there, get an update on where we are overall, and then we will dive into the charts. Um, so, blah, blah, blah. Move some things around real quick. All right. Uh, German import prices expectedly fall. Germany, the largest player in the Eurozone. Import prices unexpectedly declined by 0.4% year on year in April, missing the forecast of a 0.1% increase and reversed a 2.1% rise recorded in March. All right. This marked the first annual drop since October 2024, primarily driven by falling energy costs. Excluding energy, import prices were about 0.8% higher compared to the previous month. Prices declined by 1.7%. Right? So, from an import perspective, that's where things are in Germany. We've got Euro area inflation, meaning inflation expectations in the Eurozone increased for a second consecutive month to 3.1 in April, the highest since February 24, from 2.9 in March. Uncertainty about inflation expectations over the next 12 months also increased, right? So they're uncertain about it, inflation, but they also believe or expect inflation to increase. Um, blah, blah, blah. Inflation expectations for 3 years ahead remain unchanged at 2.5%. Expectations for inflation 5 years ahead unchanged for the fifth consecutive month at 2.1. Consumers' nominal income growth expectations over the 12 months decreased by 0.9%. All right, so the expectation that um, consumer income, right, the income coming in has decreased for the next 12, well, is expected to decrease for the next 12 months. And ba, 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 economic growth expectations for the next 12 months became more negative, falling to a negative 1.9 from April, right? So you got concerns of inflation potentially increasing. You have concerns of or expectations of consumer income decreasing, and you have concerns or expectation for growth becoming more negative, right? So kind of a negative sentiment overall for the Eurozone from a expectation perspective. Um, mm, mm, mm. Japan. Japan's 10-year bond yield rose about 5 basis points to 1.52 on Wednesday, snapping a 3-day losing streak after Governor Kuzal Ueda addressed the parliament. Ueda emphasized that changes in short-term and medium-term interest rates tend to have a more direct impact on economic activity than moves in the super long-term yields. However, he also acknowledged that volatility in the super long end of the curve can spill into the shorter maturities, affecting broader financial conditions. Financial Minister Kato also weighed in, stating that authorities will continue to closely monitor the bond market developments. Yields declined sharply on Tuesday, while reports following reports that the Ministry of Finance is considering reducing the issuance of super long bonds in an effort to contain rising yields. All right. The move followed a disappointing 20-year auction last week, which saw the weakest demand in more than a decade, with investors now turning their attention to 40-year bond sales. All right. So the bond market is interesting because you have a lot of folks that are looking at more shorter term bonds and staying away from the long term bonds. Um, so 10 years, and then you have your shorter notes, 5 and 7, that investors are more looking at compared to your 20 and 30 year, um, which makes for an interesting dynamic in the market. Um, ba, 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 ba. So that's where we are in Japan. Reserve Bank of New Zealand lowered its official cash rate by 25 basis points to 3.25, in line with the expectation and marking the lowest borrowing cost since 2022. This move followed a similar 25 basis point cut in April, along with a larger 50 basis point cut in October, November, and February. All right. In its statement, the central bank noted that inflation remains within the 1 to 3% range, and affirmed that the board is well placed to respond to domestic and international developments to maintain price stability over the medium term. However, the board warned that recent developments such as U.S. tariff and policy uncertainty in the international economy are likely to weigh on global demand, particularly from Asia, um, posing a downside risk to New Zealand export sector and broader domestic growth. All right. So again, the global situation um, is a concern for everybody across the board. All right. What the U.S. is doing with tariffs, and then how other countries are responding to said tariffs, right? The retaliatory tariffs. So that continues to be in view. Um, Last week, Donald Trump threatened a 50% tariff on the EU. EU came back, said, "Hey, we want to talk. Can we get can we get this postponed until June or July?" Um, so over the weekend, that got postponed until July. The market liked that move, so you saw positive sentiment coming out of the market yesterday after the holiday because the perception is tariff conversations are progressing. Um, Mainly that situation with Europe. Um, so you had that happen over the weekend. Um, and you still have concerns in the Middle East with oil, right? Let's go back here real quick. Let me take a look. Commodities, oil. WTI crude futures fluctuate around $61 a barrel on Wednesday as traders await OPEC meeting, expected to decide on increasing oil output. OPEC will likely approve a 411,000 barrel per day production hike for July, continuing trend accelerating supply growth following similar increases planned for June. However, Russia Deputy Prime Minister Novak noted that the group had yet to discuss the output increase officially. Meanwhile, President Trump voiced frustrations with Russian President Putin aimed stalling peace negotiations in Ukraine, suggesting a fresh sanction against Moscow might be unveiled as soon as this week. Additionally, U.S. barred Chevron from exporting Venezuelan crude under new authorization that allows the company to maintain assets but not export oil to expand its activities. Um, that's interesting. Elsewhere, EU officials are gathering information on U.S. investments for major companies after Trump stepped back from plans to impose hefty tariffs on European goods. This doesn't touch on um, this doesn't touch on a potential strike from Israel on Iranian nuclear sites. That's still something that's in play, right? Still something that's happening in the background that we definitely want to keep our eyes on as these statements from OPEC uh, are unveiled. So we want to keep our eyes on that side of things as well. Israel is still being Israel. Um, mm, 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 mm. So that's where they're over to the calendar. Let me refresh this. Move forward. Um, for today, FOMC meeting minutes at 2 o'clock. All right, get details on what the conversation was at the last FOMC meeting to really understand how that conversation goes and what each member is looking at and what they're looking at overall as a unit. Could be important um, when we get an understanding of like, how the board falls, where they land when it comes to inflation overall, right? You got this quote unquote big, beautiful bill um, that will increase the deficit by $3.8 trillion, which is causing um, major concerns everywhere. Um, and you have the stall or pause negotiation period in the tariffs. And this is causing an interesting situation for the Fed because um, you don't know what's going to happen. They don't know what's going to happen. So they're in this in-between stage, and there's some economists and market participants on Bloomberg yesterday, um, and they started discussing the labor market and how you could start to see with the um, individuals being deported, right? Um, Due to the immigration situation impacting the labor market and kind of softening the labor market a little bit. All right. Um, so you have a softer labor market because those individuals are being deported, removed out of working status. You have the Fed because inflation is still high and the impact of the tariffs have not been felt yet. Right? They haven't been felt yet for that initial period. So that will, once that comes into the market in a softer labor market, you're going to have the Fed in a space where they're not going to be able to cut rates, right? And they're going to be in this pause as the data continues to filter through, right? With a softer labor market and inflation still elevated and potentially increasing after the impact of the tariffs and then whatever happens during this pause period. Um, you got them in a situation that's very, very difficult to make a sound decision when it comes to what the future looks like because it's so inconsistent, right? So these meeting minutes are going to be interesting because of all of the moving parts that we have in the market right now. Um, so keep your eyes peeled there. Um, and we'll get a breakdown of those minutes later on this evening. Um, for tomorrow, preliminary GDP quarter over quarter unemployment claims for the dollar. You got Governor Bailey coming to the microphone at 3 o'clock. Then you got Tokyo CPI at 7:30. And then Australia retail sales at 9:30. Then on Friday, uh, German CPI, German retail sales, Canada GDP, and then PCE, core PCE for the United States. Okay. And then you got manufacturing PMI and non-manufacturing PMI for China later on Friday night. You also have member Bostic and Goolsby speaking on Friday as well. All right. So just to run, not a ton happening, but a couple pieces could definitely be impactful and insightful um, for the markets as we move forward. All right. So that's where we are from a fundamental perspective. Any questions or any thoughts or anything to bring to the table on the fundamental side? No? All right. Let's see what I missed. Okay. Cool, man. So take a look at this stagnant dollar.
Ryan,
Benny, good morning, bro.
good morning, man. My bad. I had my headset and everything been messed up. So
Oh, no, all good. I didn't it came through his iPhone. I didn't know that was you.
yeah, yeah,
How you
yeah.
doing this morning, bro?
Oh man, I'm doing it. It came to his iPhone. Everything's all messed up
Yeah.
this morning. Oh, it's all good, man. It's all good. Yeah. So I was reading this article this morning how we've been thinking like, everything that's going on with this tax bill. So this is what Rich Saperstein, Chief Investment Officer of Treasury Partners, said on CNBC on Tuesday. He said, so think about it. He said, it's important for investors to look past the tariff turmoil and look at an environment where we'll have deregulation, more onshoring. Think about the tax bill, immediate expensing from a tax basis, great opportunities. So the environment post tariffs will be a great environment for investing.
Uh.
They 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 are focused, just like we've been saying, on this tax bill.
mm.
On this tax bill. So that's why I've been kind of just, and we've talked about it a lot in this group. Been sitting in those positions because I know it's just one person from an investment firm, but my guess is that's the mindset of everybody.
I
You
dig
know,
it.
yeah, they have their moments where they're concerned about you know the average Joe, right? At least that's what their rhetoric reflects. But then they turn around and they really show their hand and what they're really focused on. They they want to see that tax bill go through.
And they're looking at right now like August.
Yep. They're moving at warp speed on it.
Do you think
And,
it'd be before August on that?
no, it could be before August. Just depends. They got some battles in the Senate, but like I said, I think it's going to pass, and I don't think it'll be watered down much from where it is now because
From
they
where it
they
is.
they control they control everything. So,
Yeah.
and I don't think anybody's on the Republican side has a backbone to put up that much fight. I think it's all going to be a show, of course, but I think at the end of the day, they're gonna do exactly what they set out to do.
Yeah.
And so, again, like we always have to keep that investor cap on, and see how they're thinking. And just like we've been saying and speculating, it's all about that tax bill. So
I'm with
that's
that, bro.
yeah, yeah. So just wanted to add that this morning. I thought that was
No,
quite interesting.
no, I appreciate it, man.
Yeah, doesn't surprise me though.
No, it doesn't surprise at all, man. It doesn't, and it's one of those things that when you're looking at everything at face value, it's one of the things that's not talked about hugely in the broader public inconsistently. Um, so a lot of people don't really know what's happening in the background.
Right, right.
Yeah,
So we just have to do our best, continue to follow that data, which we go over, every morning in the trade room, and make our plans accordingly, right? And always remember, hey, you gotta whether you agree with it or disagree with it, you gotta keep your investor cap on.
gotta keep it on. Gotta
Yeah,
keep it on. Yep, you are correct, bro. You are correct, dude. Appreciate that big time, man.
no doubt.
Uh, team, any questions on that? No. All right, cool. And with that thought, we're gonna look at some ETFs just to see where they sit now um, and how they could be impacted by that bill. Um, the dollar. We'll start here, and we broke below this level, right? And we said if we get a break, we'll look for a retest of that level, and then we'll see if we get a continuation down at least to this 97,665 area, potentially down to 95, right? So continue down, pulling back now. We'll continue to watch this, right? We're below the cloud. We do have stochastic in the buy zone here, right? So we'll watch that and see how things go. But I don't know that we get a ton of positivity um, out of the dollar, right? We might get a retracement back to the 618 area. Um, but ultimately, I'm looking at staying below the cloud and moving south. We could potentially get a double bottom here, but we'll watch and see how things evolve there. But it's a ton of back and forth that's kind of keeping the dollar pressed down, especially when it comes to just the fundamentals of things um, and where they are overall. All right, so that's the DXY on the daily. We come down to the 4. All right, and you see we broke that level, came back, retested, and then we moved south, came back fully to retest that level. We got a stochastic in the sell zone, right? So you got a buy zone on the daily, sell zone on the 4 hours. So you got a mismatch in that stochastic, which a lot of times signals consolidation, which overall, right, we could be working ourselves into bottom of the range, top of the range, bottom of the range, then move back to the top of the range. So we'll monitor that also as we continue to move. But I think this will remain a key level, right? Um, as things progress. Okay. So we'll watch that there. Um, so overall, right, dollar still in this area, but potentially moving to the downside as of now. All right. Any questions on the DXY? Nope. Cool deal. Um, quick peek at oil, right? Pulling back, moving sideways, as the article talked about. We got a stochastic in the buy zone here on the daily time frame. Got a ton of things happening. So we'll see where OPEC lies. Um, and we'll also see how the Middle East impacts this, right? Could the Middle East situation overpower what happens with OPEC? And move this higher, move price higher here. Okay. Got stochastic pressing back down into the buy zone. Come down to the 4. I'm just lingering at this 50% retracement level. Didn't quite get to the 618 level there, but we're just pressing sideways right now. Okay. But we got down to a 50% retracement level, and we'll look to see if we get that movement back to the upside, or do we move back down with that OPEC news before we get another move to the upside. Okay. So just watching the developments there on oil and see how things progress. Same thing on the 1 hour, similar to that 4. All right. So just a quick peek there. Um, Before I go into looking at some ETFs that could be positively impacted by the tax bill, do you guys have any pairs you want me to take a look at before I go into those? Nope. Pound NZD. Let's take a look at it. It's hovering, man. It's hovering. It's taking its time. Pound NZD. Overall, we've been looking at this thing to move to the upside, right? Came back down, a nice retracement here, gave us a double bottom that 221, and we started moving away, right? Stochastic pressing back down out of that sell zone. Okay. Pressing back down out of that sell zone. So we come down to the 4 where we had our 80-20, right? Shallow retracement here, push down into the 118, 127 zone. And we've been slowly making our way. We had a little wedge there. We broke out of that wedge, came back down into that area, right? And we're just hovering. Haven't quite gotten to 228 yet. That's our high there, 227. So still got a little ways to go to get us at 382. But slowly taking its time. Um, Yeah, I'm still sitting holding this one for the completion of this to the upside. We just, like I said, we just missed that 382, and we got a little ways to go. So if we come down to the 1 and we run fibs off of the low, boom, right? 50% retracement here, and we've been trying to figure it out, but we're just caught in this range. We got it back and forth between the pound, which the expectation is for them to cut rates, but they could not because some of the numbers have come in a bit higher than expected. Um, and you have us right now in more of a risk on to neutral environment. So the New Zealand dollar has taken a little bit of an appreciation with that not so risk off environment at the moment, right? With the back off of tariffs in the different key countries. So um as you see that stock market move up, right? You see some additional risk going into some of your commodity currencies, i.e. New Zealand dollar. But we're caught in this range right now. So just waiting patiently on this one. Still looking forward to move to the upside over the long term. Um, but right now we're stuck. Right now we're stuck. What do you have here, Joy? You still sitting in this one or are you looking at something different?
No, I'm still sitting in it. I seen that double top right there on that 1 hour.
Yeah,
And
I think go ahead, I'm sorry.
I'm sorry. I didn't know whether or not if this was just operating in a range or we're just stagnant.
Yeah. Yeah, I think we're stuck here in this range. That's where I think we're operating right now. Similar to this area here, right? We
Mm-hmm.
floated in that range for a while. I think same type of action here. If we break that level, then we can reassess. But if this level holds, either we bounce or I look for a break and retest and continuation to the upside there.
Because I didn't know if this had anything to do with them waiting on it, like Vinny said, the tax bill, or and then like for down south, it's starting about to be summer months for them. So I didn't know if it was slowing down for summer or a combination of waiting on the tax bill and the volume?
Yeah, so let's see. Pound rose 135, near the highest levels since February, driven by improved market sentiment after U.S. Donald Trump postponed tariffs on the EU. This delay boosted global risk appetite, supporting the pound, which was already gaining on strong domestic data. UK retail sales rose 1.2% in April, fourth consecutive month of increase, showing consumer resilience despite tax hikes and trade tensions. However, inflation remains stubbornly high at 3.5%, exceeding the expectations. Market now see a 50% chance of Bank of England rate cut by August, um, with another possibly by the year end. UK markets closed for a public holiday on the 26th. So inflation is still high, right? Um, Strong sales data, but inflation is still a concern. So it'll be interesting to see what the Bank of England does here when it comes to interest rates. So that's kind of um, holding the pound, right? Um, New Zealand, bu- 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 New Zealand. New Zealand dollar rose around 59.7 on Wednesday after a brief dip following Reserve Bank of New Zealand's interest rate decision, right? They cut rates, remember, which was widely expected. Official cash rate, blah, 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 sixth consecutive time. Inflation remains within the target band. Central bank also signaled it has a scope for further reduction to support economic recovery that has been clouded by U.S. tariffs. So while the Bank of England, they're expected to cut rates, but there's a potential that they could hold because inflation is high. You got New Zealand cutting rates and expected to cut more because they're in within their target range um, as of now, right? Uh, Expectation of the cash rate declined 2.9 in the fourth quarter 2025 and 2.85 with first quarter 2026. However, market scaled back a chance of an easing next meeting in July to around 36%. Um, Kiwi faced downward pressure due to a rebound in U.S. dollar, buoyed by data to improve economic sentiment. Right. So you got Reserve Bank of New Zealand that's looking at cutting more, um, and and faster. They're at a lower rate. So that could also lead to this pushing higher. So we'll watch the data coming out of the UK, right, to see if it is supportive of cuts, or will it look more like the Bank of England holding for now, especially because that inflation number is still above the target number. So things to keep our eyes on there. But I think that's what it's more about, is that inflation number out of England. um, and how they feel about that number actually continuing to move to the downside in the short term. So that's where we are. That's where we are. So we'll see how things move from there.
Do
Any other
they
questions?
do they unemployment rates come out at the same time, or are they separately reported?
Bank of England and New Zealand?
Yeah.
That's a good question. That's a good question. I have to look that one up.
Okay.
You have to look that one up. Yeah, I'll check on that and I'll get back to you on that. Cool deal. All right. Gold. Gold and the pound dollar. Gold. Let's clean this up from a daily, and then we'll get back down to these lower levels here. Boom. So gold, this is where we are. Kind of stuck here, right? 3333.43. Right? Somewhere in that range is kind of where we've bounced in between. Went up a little bit, came down a little bit. 50% retracement on the capital fib. Still hanging out above the cloud. We have a stochastic in the sell zone. Um, but that's where we sit. Ba, 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 ba. Gold. Gold rolls around 3,320 per ounce on Wednesday as investors took advantage of its recent weakness to buy the dip. Though gains were limited by easing U.S. EU trade tensions, it is in this latest move, Donald Trump backtracked on the 50% tariffs for the EU, delaying its implementation until July 9th. To allow more time for negotiations. Additionally, the dollar rose after data showed U.S. consumer confidence rebounding sharply in May from a near 5-year low, making the greenback price gold expensive for the currency holders. Meanwhile, Minneapolis Fed President Neil Kashkari on Tuesday called for keeping interest rates steady until there's more clarity on how higher tariffs affect inflation. Investors now await the release of the Federal Reserve's latest meeting minutes, as well as PCE data on Friday for new insights on the central bank's rate trajectory. Right? So you got uncertainty when it comes to inflation and how to be impacted by tariffs. You got central bank speakers stating that they favor, well, they kind of a split there too, right? You have some that want cuts, but you have some that want to hold to see to get more clarity. So you got a back and forth there, but there's not a lot of fear in the market right now, right? Because the back off of the tariffs. So with that, you don't have a ton of necessarily buying of gold right now from a retail perspective. On the back end, you still have central banks buying more gold like crazy, right? We've talked about this for the past couple years. Um, Central banks have bought more gold than they ever have in history, which has led to this crazy rise and ultimately will continue on the rise. But right now we're stuck in this back and forth space. All right. So looking to see how things move from here. Crown pattern, I do not see a crown pattern. If you're talking about this little left, this little curve
Yeah.
here, you got the tip that's higher, right? So you don't have that coming back down here, right? So you got this as the high point, not this. So that wouldn't be considered a crown pattern there. You see what I'm saying? Because you got this, right? You need this to be here and this leg to come down. Does that make sense?
Yeah, thank you.
Okay. So no crown pattern there. But that's where we're on the daily. We come down to the 4. Zoom out. Run this fib off this low here. Nope. We took out the A there on that move down. So we'll flip the fib and run it from the top side. And that's where we sit. We got a 618 retracement, didn't quite get to that 786 level. And tried to push down, wasn't able to get to the D extension. We'll take this out and avoid confusion. Boom. Right. Not able to get to the D extension, stalled at that support level, previous resistance. And we move back to the upside. And now we're kind of stalled here. You see inverted head and shoulders, Joy? Where at?
It looked like it was one right there in that
Here?
consolidation area, but it's not lining up.
Gotcha. Okay. Okay.
It's right.
Right in this area here.
Yeah.
Yeah. I see what you're looking at. A little off, but you might get a low percentage on it. Yeah, I got a lower percentage on it. But I follow you there. And it moved up. All right. Boom. Good eye there. Good eye there. So now we're looking at where we are here, right? Pushed up, stalling a bit. Do we get a pullback and a continuation to the upside, right? And over the long term, I'm still bullish on gold. We could see some retracements, especially as um, investors pile into risk assets. And as we get close to that bill being passed, but kind of stagnant right now, right? Um, could we get to this D extension before moving up? We could. We could. So we'll continue to watch. We'll see if we're able to break back down below this level. We'll have to break that 3,100 level, get to the D extension, and then we'll look at 2956, maybe for some key buying areas. So as we move down, boom. All right, here we are on the one. Those got taken out to the downside, right? A got taken out there, so we flip it and run it back to the top side. And this is where we sit. Here's our consolidation. Hold on one second. So here we are, right? 1 hour time frame, 236 retracement, not quite into that 118, 127 zone. So we're just moving sideways right now. So we definitely could have a retracement come, get us back to a low price. But right now, I don't have a ton on the higher time frames on gold. We come down to the 30. Boom. 80-20 on the 30-minute, right? Shallow retracement. Shallow retracement, 118 and 127 zone. And this kind of sets us up, right? We start to get this move down on the lower time frames. It sets us up for that retracement on the higher time frame. So 80-20 here on gold. Appreciate you having us look at this, Reese. There's your setup. Boom. And that could set us up for deeper retracement to come on those higher time frames. Boom. All right. That's gold. Questions on gold? No? George holding long 330.68. So you got an entry somewhere in this area.
Yeah, I'm on the 15-minute. It was in a sweet spot. It broke above the cloud. And right now I'm looking at price in between the 50 and the 200. I was looking for it to bounce.
I got you. I got you.
Yeah.
So watch this here, right? So higher time frame looking at retracements to come, right?
Yeah.
On the lower time frame, again, right? The lower percentage head and shoulder pattern, even if we press up a little bit higher, right? Watch for a right shoulder here and a move down. Lower percentage, but put us in that range. Potentially retesting this area here, maybe a bit higher, right? So be aware of that. So you could get another push to the upside, but just be aware. You could see more downside action on that. But great work. Sweet spot. Probably you're in profit right now, right? So good work. Good work. Love it. Interfere from the top, looking for a 618 sell to create a higher low on the 4. I dig it. Yeah, let's see. Let's see what you're talking about here on the 4. Looking at that smaller wave there. Yeah, but it'll be easier to see on that 15 or even a 30-minute on that retracement there. Yep, yep, yep. Good work. Good work. Questions on gold? Yep. All right.
Nope.
Beautiful. Beautiful. Pound dollar. Been rising, right? You had to draw this fib in manually. Dollar been on the rise. Just worked at 382 there, and we continue to push. Broke previous resistance, coming back to retest, stochastic in the sell zone. Didn't get that deep retracement, right? And pushing to this 118, 127 area. Okay, trying to turn over. We'll see. I'm iffy on dollar strength, right? I don't know that we actually. I am. We got a lot of 80/20s on these dollar pairs, and we could ultimately see it. I'm looking for what the catalyst would be for these to play out, right? Because I'm sitting in some of these 80/20s on dollar, well, one of them, but looking to see what the catalyst would be to move the dollar in the positive direction. Um, and right now, things are holding the dollar kind of at a low point. So it's going to be interesting to see. So we come down here to the 4. Take this out. This is where we are, right? 618 retracement headed to the D extension. Okay. And we got breaks in the retest, right? We got breaks in the retest. We broke this level, came back and retested. We broke this level, came back and retested, right? So now we're ready to continue moving to the matching extension. Okay. So headed north from a 4-hour perspective, the extension there. Uh, so that's on the 4. We come down to the 1. Let's see what we got. We got an 80/20 on the 1. Reese putting them in for us. Let's go back. I need to take off this other one. There we go. 80-20 there on the 1. Great call, Reese. Reese got us moving today. 7's in the chat for Reese. 80-20 on the 1. Right? So again, looking at retracement potentially to come. We need the catalyst for it, but 80-20. Okay. And look for a low price and then get back long. In my opinion, I don't see as long term getting positivity out of the dollar, but we need a low price first. Boom. Right. So there's another setup for you. You got gold to the downside, 80-20 on the 30. You got pound dollar, 80-20. Beautiful setup. I already started pushing out of the zone, pulling back a little bit, right, to the downside. So, 2 opportunities on those 2 80-20s right there for us. Boom. Boom. Great work.
Can you draw a fib from the top?
Yep.
Okay.
And we'll drop down and look at that too. Might give us a better look. 50% on that sub fib there. So if we come down to the 15 or the 30, we'll look at the 30 first. Got that on 80-20 here as well on the 30. Look that fib off the high. Ooh. Boom. Sub fib 80-20 here. So does this give a reversal to give us a higher price?
It did break below the cloud. The lagging span is just inching below on that.
Break of the cloud, boom, right? 15. 80-20 on the 15 as well. Let's see if we're able to hold this low. All right, price is pressing down pretty strong right now. Evening star pattern here, or morning star pattern here, boom. Let's see. If we get price to move up to give us a high price to get us a good entry on this one to the downside, but we gotta hold this support in order for that to happen. Let's watch and see if we get a high price on that. That'll be a good setup there. But you're still in a good position overall on the 1, still higher in the zone, but it's starting to press down now. Still be a good move to the downside. But if we get a high price, that'd be even better for us. So let's watch and see if this turns around. All right, that turns around, gives us a high price here. I love it. I love it. Questions on the pound dollar? 80-20 on the 1. If you want to wait, see if we get a high price, see if this 80-20 on the lower time frame plays out to the upside to get us back into this range. Right there. All right, see if we can get a pullback there. We might not. That's dropping pretty good. We may not. But let's see. Questions? No. No. All right. Cool beans. Don't have time to go over the ETFs that I was going to go over, which is totally fine. What I'm gonna do, I'll put some of them into the community for you guys to check out. Benny, I'm gonna send you this list too, bro. It's an interesting breakdown that I got here.
Okay.
But you guys can take a look at some of these ETFs and how they could be impacted by the passing of this tax bill. So we can make sure that we're in position when that time comes. Benny, anything before I wrap it up, bro?
Yes, sir. Just a reminder, NVIDIA earnings today, 5 o'clock
Yes,
after the
NVIDIA
bell.
earnings
So
today.
yeah, so if you get the market kind of moving sideways, don't get a ton of volatility. That's a big one today that everybody's waiting on. That's it.
The world is watching NVIDIA.
Yep.
I think it could be an explosive one, dude. With the stuff out of the Middle East, higher in the zone, this 80-20 might not play out here. I think we get a jump on this, and I think it continues to move to the upside.
Yeah. You never know with NVIDIA. I think that too, but I mean we've seen in the past where they've actually crushed the numbers, but they didn't
True.
they didn't meet these crazy expectations that the market may have had,
This is
in
true.
one area or the other, and then it dropped. So I've seen that happen a couple times too. So we'll see. Like you said, with everything else that's going on, it could definitely push it to the upside. So because that it's kind of been hovering in that zone for a while.
Yeah.
So we'll
And
see.
and maybe we push up and we get an 80-20 out of this
Maybe,
for a pullback.
maybe we shall see. But that's gonna be a big one today.
Yes, sir. Appreciate that, man.
Yep, no doubt.
All right, good people. We'll be back at it tomorrow morning, 6:30 a.m. Eastern Standard Time for this pre-New York session with my awesome partner, Mr. Benny Allen. You all have a phenomenal Wednesday. Peace.